everybody. Welcome to the Trading Market Technicals Morning Call video for Wednesday, August 29th. Another pause day. We are in our consolidation day awaiting Jackson Hole, Ben Bernanke's speech on Friday morning. Short-term market indicators are starting to roll over from overbought levels, which we mentioned, and it can do that while we consolidate, unwind that overbought reading, and then obviously make a move one way or the other. Quick couple of points. Semiconductors starting to show signs of rolling over. I mentioned that yesterday as well. We did have ASML, ASML, and CLAC come out reporting. So they were down about $2. Relieved a little bit of pressure at the end of the day, but still showing signs that the sector is starting to peak and rolling over. And of course, that's not a good sign because we do need the semiconductors to rally along with equity markets. And I'll point that out in the video. A couple of small points I want to make out as far as Ben Bernanke speaking. There's a lot of questions going around. Is he going to accommodate the economy with additional stimulus? It's possible, and it's very anticipated. If he doesn't, I could probably, if I was a gambling man, and I'm not, I would definitely say the markets would sell off on this. Now, even if he said, okay, we're providing stimulus, how far does the market rally to 1440? 1460. Really, nobody knows, and we're not in the guessing game. We look to react to price action and what the charts are telling us because we are technicians. We're not fundamental analysts. However, a few things that I did some research on that I know what the Fed is looking at, and I do think that the Fed is going to be. There's a couple reasons why the Fed may not add additional stimulus, and that's because of rates. And what the Fed really follows is a 5-year break-even rate, and that's a rate of inflation, which was essentially in a downward channel, which was suggesting disinflation back when the last time he had stimulus. Now, in order to correct that, he would accommodate, and that would be appropriate. But however, now the Fed is looking at this 5-year break-even rate. Now we're at closer to 2%. So really, technically, there's no reason for him or the Fed to accommodate. But I do think that there's some sort of accommodation that's going to be needed for him to keep the markets on hold here until the election. So it could go either way. Now, obviously, we've seen the Fed do anything he wants to do. So we don't want to really just concentrate on that and look at that. What do we do? So what's the common thing we do going into Friday? Is really be flat, right? We don't want to have a position and expose on a big risk event that the market is obviously waiting for the last 2 weeks or so. We have had no volume. Volume has dried up, and that's something that we don't want to be caught on the wrong side. It's a 50-50 chance, and trading is not gambling. We are waiting to see what happens, and then we can react to it. There'll be plenty of time to either get short the market or look for the best stocks to get long into going into Friday. Now, I still wouldn't hold anything over the weekend. That's just me, especially when we have this low volume. Markets tend to gravitate to the upside. And as you can see, if you looked at Friday's price action here on a 10-minute chart of the spiders, you could see what we mean. The market came in, rallied back up again to come back in, and you could see this just as chop. And if you are any type of trader, a new trader that's looking to trade this market, and you got caught here being short, and then you try to buy the top here, and then you try to buy the bottom here, you just got chopped your account up. So what we recommend is take 1 or 2 trades, if at all any, and just wait for what's going to happen on Friday. Now, today's already Wednesday. We're at the end of the year. At the end of the month and at the end of the summer. So market volatility will start picking up next week slowly towards the end of next week. And then, of course, we should be right back into full swing of things come the second week of September. So we got about another 6 trading days of this. And then we should be really getting back into the swing of things. And I do think it's going to be very, very busy only because we haven't done anything. Most of the summer was really quiet. So I do anticipate some market volatility, and that creates big opportunity for us. Now let's talk about. I mentioned copper a lot, and I kind of beat it to death. And I want to. I haven't brought these charts up in a while, and I want to bring up the ratio charts of the S&P. As you know, Dr. Copper is an industrial metal. Copper is a major leader of the S&P. If copper fails, usually the market tends to follow suit right away. This is not the case this time. And can it not be? Sure, absolutely. But if history repeats itself, That's one thing you want to keep an eye on, and we'll get into that in a moment. I just want to go over quickly our indicators. Obviously, nothing has changed. Nothing has happened. I'm not going to bore you with similar details, but I just want to make sure that everybody understands how Dr. Copper really leads the markets. And if you looked at any of the charts of copper versus the S&P, copper bottomed first, and then the markets rallied. And the same thing would happen in 2009, and then of course 2010. This is not the case as of right now. So copper being relative to the gold, as you know, risk on trade copper, risk off trade gold, because it's a safety haven. You could see the difference in the two. But I want to get into that real quickly, and I just want to make sure that everybody understands what we're following here. Now, let's just get into the VIX, and I'll get into some. We're going to go through this real quick. Nothing has changed. As you can see here, the VIX bounced off, and it's just kind of drifting along. This really is nothing really to tell you. Wouldn't get so excited about looking to buy VIX calls. To me, I'd like to see if like Ben Bernanke, for instance, says that we're going to add some stimulus, they'll just jump on the bandwagon and sell the VIX. The VIX would break down below, getting below this band area here, and then looking to rally back up again. That's when I would look to get long the VIX. As it breaks below the Bollinger Bands and closes back in, that's a buy signal, and that would be a sell signal for the market. But until then, stay away from it because it's just it's an eating asset. It'll just eat away at your premiums if you're looking to purchase calls in the VIX. Now, one thing I do want to show you is the S&P 500 above the 50-day moving average. We talked about this, how we are at lofty levels, right about 70% right now, and rolling. So this is a good sign. Market's looking to pull back a little bit, and that's something that I'm going to keep an eye on as well. Now, I want to concentrate a little bit on the S&P strength versus the semiconductors, copper, the banks, and the transportation. Now, the two really things I want to point out is the copper, as you know, Shanghai, and of course the transportation sector. Those are really three big key market drivers that fuel equity markets to the upside, okay, if we are in a bull market, and or to the downside. In this case, it hasn't done so, right? The Shanghai has been very weak, breaking below certain key averages. But if you look at copper, copper's been kind of just sitting around here, just gauging around, doing absolutely nothing, and this is not good. I keep saying that, and listen, anything could happen. Copper could actually pick up and start breaking through to the upside. I don't think that's the case here. Let's look at the transportation sector, and then we'll look at the ratio charts before we get into the regular charts. Double top back in here. As you know, this is very similar to the IYT, right? It's the ETF. Very similar. And as you can see here, we had that. If you recall, we had the double top, lower highs, lower highs, lower highs. And as you can see here, here's this trend line back from June. Okay, now I think that the transportation sector is leading the markets lower. I mean, that's just I can't see how the transportation sector does not rally with the equity markets, and the S&P rallying with S&P and the Qs kind of rallying. That's fine with tech sector, but this is a big warning sign for me. Big warning sign. Not that we look to short the market. We want to stick to what the trend is for the day and for the week, and obviously the trend is still up. But this is a warning sign to use caution. Okay. Now let's get into our ratio chart. So look at the S&P versus the transportation. As you can see here, higher highs, lower highs, lower highs, lower highs. And then again, we tried to break out. We couldn't even get above 5,200, and then we rolled. And here's our S&P versus the trend. So S&P leading the transportation sector, not what you want to see, not healthy. Okay, so higher highs, so S&P leading the transports. Now, we look at our stocks. Semiconductor had a great run, if you remember back in July 16, really had a great run, now starting to roll over. So this is really not a good sign. This was at least a healthy sign with the S&P that the semiconductors were rallying with the S&P. But now that this has subsided, now starting to roll. A break below this 395 here, I'd be really looking. Would be personally looking to sell semiconductors. But as of right now, it's kind of sitting here and just kind of wandering. So, we want to wait. We want to get confirmation, right? Anything that we do, we want to get confirmation on the trigger before we look to enter a trade. But this is clearly, as you can see, rolling over. Not a good sign. Let's take a look at the bank sector, which was really better. Banks have been much better. And again, with the semis and the banks rallying, I was thinking, well, maybe the transports will catch up. It tried, and it failed. Copper didn't even move. So this here, and the way we are here, as you can see, we have a wedge formation here. This is something that's really a big warning sign again. And I keep saying it, and it might take another month before the market rolls over. Who knows? But just something that I want to point out. This is really just use caution here and look to trade the best setups. Okay, so now let's look at our index charts in our S&P. We had literally no movement, as you can see here, for the last 2 weeks, right? We popped up, and then now this is this Draghi speech up in here, and then now we just kind of faded away back up in here above this bearish rising wedge. So this is something that I am watching to see if we're going to break back below. Now we do have support, right? 20, 50, 200, and I want to see how far this market's going to come. And let me just get rid of this, just so you guys can see this clearer. We're back at these areas. Obviously, breakouts in downside and or upside really should not be traded right now in this low volume environment. Okay, just make note of that. Okay, so we have the S&P, right? Let's take a look at our spiders, and as you can see here, I like to use spiders because I like to gauge where the volume is, where we can't see it in the cash. Okay, volume anemic, and it's going to happen that way, obviously, part of the summer. But look at our indicators. MACD rolling over. Stochastics already rolled over from overbought levels. But we're still hanging around this area. Now, I think we're not going to go anywhere the next couple of days. And Friday, it would not surprise me, Ben Bernanke stating something positive so the markets can hang in there until the election. Okay, IWM's a little bit better than usual, but again, volume really stagnant here. Nothing really going on in volume, and we're starting to roll over on MACDs, and we have rolled over on our stochastics already. So this is something that if the markets let's put it this way: if the S&P is at its highs, where do you think the Russell should be? Should be way up in here somewhere. So that's not happening as well. Transportation, the IYT. I showed you that that head and shoulders pattern, and then we had a breakout of the symmetrical triangle. We had two different patterns here. We actually traded up to the right shoulder and then failed again. And look what's happening now. I think that the transports will lead the markets lower, along with the Shanghai and the semiconductors. Semiconductor, SMH, ETF rolling over, as you can see here. This is the line in the sand, the 200-day moving average, and then you have the 50 down below here. But once this breaks, I think you're going to see another test of the low sometime soon in the coming weeks. Okay, lastly, Qs hasn't gone anywhere, as you can see. And again, this is a weekly chart, so we really want to look at this at the end of the week. But just want to follow. We have a doji, and again, guys, a break below 67.45 would trigger the double top sell signal in the Qs. So really make sure to take a look at that. And last, we'll just show you the daily chart. Okay? All right, guys, a little bit longer than expected, but I really wanted to point out the relative strength from the S&P to the key sectors that really need to rally along with the S&P, which are not really rallying. So use caution out there. Take a couple of days off. Wait till Friday. See what happens. And then when we come back on Tuesday, market should really start to pick up. I do think Tuesday and Wednesday of next week will probably be light, but as market participants and big players come back to their trading desks, we'll start seeing a pickup of volatility, which will create a lot of opportunities. So, hang tight. Be patient. Trade a couple of trades and then call it a day. All right, guys. We'll talk to you tomorrow. Have a great day, everybody.